this summit's theme to be successful, for it to be translated into and sustained as the Nigerian reality, our economy must come up to certain imperatives. There are at least 3 of them. First, it must be globally competitive and productive. Let me re-emphasize that, because for me, what Made in Nigeria speaks to is our ability to create an economy that is productive and globally competitive. But that's not all. It's got to be inclusive. It's got to work for all. And at the heart of it, it's got to add value. From my understanding of the numbers I have seen, current economic and business conditions are far from ideal. However, and we shouldn't take it that because they are far from ideal, therefore, no. Because they are far from ideal, they offer us as a nation an opportunity to revitalize and to re-engineer this economy. Let me be very, very clear about the current characteristics of which I speak. As an economist, in those days when I still paid attention in class, the worst case scenario, what an economist feared the most, is what is called stagflation, where you have stagnant growth coupled with rising costs. Your Excellency, distinguished ladies and gentlemen, regrettably, our position is now worse than that. What we have is an economy that is shrinking in size. So far this year, probably shrunk by about 1.5% when you combine both Q1 and Q2. Being clear, yes, it's shrinking this year, but the problem didn't start this year. 2013, since then, the rate of growth of this economy has slowed, and now it is contracting. What else? For those who don't appreciate it, the Nigerian economy is driven by 2 broad impulses. It's driven by international events, things that happen outside and largely outside our control, and those things that we do. 4 things should be borne in mind when you think about the international environment and how it affects Nigeria. The first, what's happening to global economic policy? The second, what's happening to global trade? The third, what's happening to global capital flows? And finally, what's happening to diaspora transfers to Nigeria? Of these 4, only 1 remains favorable. The outlook, the current conditions and the outlook for the other 3 have worsened and likely to remain unfavorable for Nigeria, perhaps in the lifetime of this administration. Now, I say that with all sense of responsibility because it is intended to ginger us to the nature of the challenge that we face and that we must overcome. Let me quickly deal with these 4 issues. Annually, Nigeria takes somewhere between $20 and $23 billion of diaspora transfers. That's holding. Capital flows. Now, that's a bad story. Doesn't matter whether you look at it from a foreign direct investment stand or a foreign portfolio investment stand. And believe it or not, this is at a time when other emerging market countries are beginning to see a sustained and strong recovery in capital flows. Worse still, and I draw attention to this very deliberately. As of today, approximately 13 trillion US dollars, 13 trillion US dollars of investor money is invested in assets that at the point of investment you know will produce a negative yield. And yet, Nigerian instruments, 20% yield, and we cannot attract investment. Now, it tells you just how things have changed for us. 2 years ago, 3 years ago, we seem to be the toast of the international markets. So that's capital. What of trade? Now, that really is bad news. In 2013, Nigeria earned in excess of $90 billion from export revenues. Indeed, the actual figure is 96.7 billion, of which 90 billion was from oil, the remaining 6.7 billion from non-oil. This year, we'd be lucky if we get to $40 billion, partly from shut-ins, but also from lower oil prices. And I think it's important at this point that this administration, Mr. President, we have to begin to understand that the dynamics of oil have changed. As a nation, we have to understand that hoping that oil prices will improve to bail us out isn't likely to work anytime soon. And the reason is very simple. The production of shale oil, indeed, the cost of production of shale oil now imposes a cap on oil prices. Today, we are told there are 72 countries in the world that potentially could produce shale. The United States already does. The Chinese are investing heavily therein. Similarly, and the Indians. What I'm speaking to are a group of nations whom we would ordinarily expect to patronize our oil, but who are looking for alternatives. In other words, therefore, distinguished ladies and gentlemen, Mr. President, sir, it's important for us to begin, well, whether we like it or not, we are going to be weaned off oil. Question is, will we wean ourselves off or be dragged kicking and screaming? Currently, I'm not sure. So, international monetary policy, in particular, doesn't look good for us. The dollar is strengthening, and the likelihood over the next 18 months in particular is that the dollar will continue to be strong. That's bad news for us, by the way, because it also means a lower demand for crude oil. So in other words, as I say, the international environment isn't looking good for Nigeria. What of the domestic? On the domestic side, the big challenge that Nigeria faces, but which she can overcome when she's ready, include the following. First of all, there is the absence of a policy framework which articulates national development preferences and attainment paths. I do commend the Honorable Minister for Budget and National Planning for the strategic implementation plan that they have put together. But I must say, that falls short of a development plan. Yes, it's good for the year in which it is concerned, but it doesn't help investors. It doesn't guide the economy as to what our national preferences are and what our development paths are going to be. In other words, where do we want to go? And most importantly, how do we want to get there? Failure to do that, ladies and gentlemen, failure to do that, we cannot expect investors to invest. I note the Honorable Minister's comments about the private sector being the engine of growth and development, and I also note with gratitude his comments about the government being willing to encourage and support the private sector. I'm afraid presently, that is not how it looks. Presently, the way it looks is this. You have uncertain policy attitudes towards private capital and markets. That cannot for much longer be allowed to continue. Oh yes, any economist must understand, markets do fail. But that is where the regulatory capacity of the government to intervene when markets are likely to fail and to correct for such failure. The fact that markets can fail is no reason to suggest that the allocative efficiency that markets and transparencies that markets bring must be turned overboard in return for a system that is less transparent and certainly not allocatively very efficient. Added to all of this, we're seeing low productivity. The environment remains uncompetitive and the ease of doing business not making significant progress. It remains very shocking to me that Nigeria today, out of 144 countries, still ranks around 125, 126 in global competitiveness. I know there's a National Competitiveness Council, but I struggle to understand what targets have been set for it as far as Nigeria moving up these ranking indices are concerned. It's important also to draw attention to our continued dependence on oil for revenue and FX. Oh yes, a lot is said about the need for diversification. But let me put that in context, ladies and gentlemen. Today, Nigeria has 46 economic sectors. So, earlier, before 2010, we had 33. That suggests a decent level of diversification. Where we remain undiversified are in two levels. First, oil, and it's accounting for more than 70% of public sector revenue and more than 90% of foreign currency earnings for Nigeria. That's a problem. A second problem is that when you look at the structure of our output, 4 sectors account for more than 70% of our total activity. In other words, it's not about diversification. It's about reducing the level of concentration. Because once you take out agric, once you take out oil and gas, once you take out ICT, once you take out real estate, and you take out trade, that's pretty much the Nigerian economy done. That can't be good enough. So, if these are the current conditions, what then? I think it would be very uncharitable for us in the private sector not to understand what this government has done.